Hey everybody, this is Chris with ORBTraders.com going over the September 18th trade plan for the New York session. First, let's look at the news. We've got unemployment claims 1 hour before the market opens. So keep in mind, if you are trading pre-market, there may be some increased volatility during that time. And I think everybody knows today was FOMC day, or if you didn't know, we had an FOMC rate change today, and we can pull up, I know you can pull up so many different things. You can go to CME, you can go into the Forex Factory, and you can see where the forecast was, what the previous number was, and of course all the related articles cutting at 25 basis points. And there are talks for additional cuts. Now, I'll be totally honest, I didn't even watch the conference. I was unable to watch that, so I need to get a little bit caught up in terms of what came of that, other than, we saw the rate get cut. And it was totally expected after all the discussions and decisions made prior to the actual event. I think everybody was pricing that in and expecting that, and you can always go to FOMC. We're just typing FOMC. I believe this should bring up, let's just do this, FOMC CME. This should bring up your countdown for the next FOMC in 41 days, but more importantly, the probabilities, where we may end up, looking like a potential cut in October on the 29th. So just keep that in mind. FOMC Wednesdays can be a day where many traders unfortunately get caught on the wrong side. So being aware of what is coming, let's just look at the calendar really quick. The 29th is the last Wednesday of October, so very last week, right before Halloween. But yeah, keep that in mind, because you could trade in this chop or this volatility, and maybe you'll get out of it on the right side, which I was fortunate today, but maybe you don't get a trade that ends in the right direction. And the point I'm just trying to make is, a lot of the times when FOMC comes, it is better for most to just stay out of the market. You can press your luck, and if you are going to, keep your size small. I was trying to point out that I would like to look, and on previous FOMC days, I've done this before, where I've looked at the time stamp for when the data print comes, so it's at 12, but then I also look at the conference time, and my first take is changing my charts down to a tick chart. So I've got the NQ set at 1024. I had the ES set down to 512s. Find whichever tick you prefer. I think these are some pretty decent tick measurements and increments to go by during an FOMC. It helps you really see the full picture right off the bat. And the whole point of dropping down, we know it's going to be volatile, but the point that I would like to just make sure you're aware of is, most FOMCs, you're going to get a move. It's going to be an explosive move away from where price is currently at. And so you can see, leading up to the 12 p.m. print, we started to get some buys, about 10 15 points worth of action, from 61s up to 83, so close to 20 points there. And then the data print comes, and then we first drop down and then come up, and then we have a big sell-off. So what I would like to find out is any potential areas that we might either break through or stay in terms of support zones, and then sell off and continue to go in the initial direction. So I look for the first high to be set after the data print, and then I look for that first major low. And so on the ES, you can see after the data print at 12 p.m., we had a little bit of a sell-off right off the data print, but then we came back up, we set a high, we tagged it about 3 times, or 2 other times after it was hit. Then we sold off. And then you see that change in the direction, and if you wanted to use just a simple trend line and we see that that breaks, you start setting higher. That can work. There's other studies that will plot swing lows and swing highs. I just like to visualize these. So if you're looking at this from this standpoint and you see a high get set, you don't know what's coming, you don't know what's going to be, showing in the future, but you can see that there was clearly a high up here, right? And then we sold off. Now I am just waiting after the sell-off for a retracement. And so I would initially take that high, draw it to that first low, and sit here and wait. And I would be drawing that after you see a clear break in this trend and it starts to stabilize. You get almost a head and shoulders that's inverse. So here's your head and here's your shoulders, and we start to see buyers step in, but we go right into this fib retracement zone, and it technically goes all the way up to 78. You can add even more levels. 78 is as far as I will go, and traditionally I will only go to 61s for a traditional fib support zone. So I draw this up, maybe bring this over through the rest of the session, and then in my head I'm thinking, okay, so now I see this trend change. Let's start to make this draw. Let's box out that potential area of future resistance if price goes up in this direction, and if it fails to stay above, let's think about where price could go. And that's where I like to leverage these fib targets, specifically the 23.6, the 61.8, and the 127 fib target. So fib 1, fib 2, fib 3. And you can see that we were able to hit the target. However, we didn't just come into a clean target. We came down, came up, came down, came up, came down, came up, down and up. A lot of back and forth. And I want to point that out because if you're in a prop firm account with drawdown rules, your drawdown can easily be eaten up inside of that. So the key is to keep your position size smaller on days like FOMC. I would not go to your full max allowed contracts. And if you're doing a funded account, A, either stay out of it if you're not confident in trading this action, or B, if you are, keep your size low, put in some brackets, preferably larger than your typical brackets so you can stay in a move. And don't get too greedy when you're in the green and maybe you're up a bunch. That might be the end of the move. But today we saw 2 fib target levels on the ES get hit, and I was actually trading the NQ, but I just want to demonstrate from a standpoint on the ES how you can actually leverage the tick chart, and you can even go down on the 512 to the 512 on the NQ and do the same thing. So just a little bit of a recap on the FOMC play. We can also put I guess that line was there to illustrate the 12 p.m. print. Again, this is on ticks, so it would be more accurate to go in and make sure this is right on 12 p.m. And I'm Mountain Standard Time, so adjust that to whatever time zone you're in. So you can see similar action, came down, and then hit a high, right? So we mark that high, and we notice, okay, we're still going, we're still selling. Oh, we're getting some buyers. Here's a significant key level. Oh, we just broke that. So clearly there is a trend change right there. So let me go ahead, grab the high of that current action, and this all happened within 15 minutes. And let's go ahead and plot this potential fib short zone, which again can go all the way up to the 78.6. I'm just going to box in the traditional frame, a time frame or price range for the fib zone that I like to use. Bring that over. Actually, I'm going to change that to a reddish, pinkish color. And then you can also keep using the key zones that you normally plot. The overnight low, London low, Asia low, your fair value gaps, prior day low, etc. But keeping that fib on there allows you to see potential targets. And there's one that almost hit, very close, literally within 5 points on the NQ. But again, we came back up. We retraced over half of that initial sell-off. And sure, we sold off again, but there was a lot of chop inside of this move. Coming down, coming up, coming down, coming up, coming down, coming up. And it goes incredibly quick during an FOMC day, especially after the press conference, which right here, you can see that the conference, right when that started, sorry, I'm trying to put a vertical line here, we started to get a pullback and the retracement of that fib zone just coincidentally lined up with when the press conference started and the sell-off close to that TP hit. And you can even look, I guess if you wanted to bring this into a 1 minute time frame, and we look a little bit closer. Sorry, we gotta look for Thinkorswim to figure out what it's trying to do. Too many days on here. Let's go with 1 day. So you can see on the 1 minute, if we take that drawing out, and we're looking in between this vertical bar and this vertical bar between the FOMC data print and the FOMC event for a high, and the first significant low, which would have been down here. And we can see that we had 2 candles break above on the 1 minute and immediately flush back down inside right at that press conference. I personally would not be in any trade. If you're trading the FOMC first 30-minute window, before you get into 12:30, in my opinion, I would be flat until after 12:30, 12:31, 2, 3, 12:35, maybe at that point looking for an entry. And we get very close, again, like I said, to this first target profit. And you could have used, EMA bands to stay inside of it. You can see how we've gone out 1, 2 standard deviations from the VWAP level itself, hit lower bands, the 20 SMA, or sorry, that's actually right here. The 50 SMA, where it breaks above and immediately sells back down. I mean, there's a ton of different indicators that you can leverage. The point I'm just trying to make is dropping it down to a tick chart. We can go into even to the 200s, 233s. These are just default settings that Thinkorswim provides you with. And we can continue to just look at that same initial move right off of FOMC. Look for that high. Find that first low. And I'm pretty sure you can find different fib draws inside of here. If you take an area of consolidation where you're just ranging and you look for that breaker, which you got a breaker right here, breaking this zone, and you draw that to the first low, you see that we go back up into the fib zone, hit TP1, hit TP2, hit TP3. So you can go even tighter. I am just showing the bigger significant fib draw that I leveraged today from the highest point to the lowest point. But these fibs will happen inside at a smaller and in a shorter time frame. But it will be very quick, so you've got to be on the charts, getting ready to plot this stuff out, recognizing what you're seeing, and looking at it objectively and not getting emotional just because there's a ton of price action going on. There's so much of a range being presented to us that we think, oh, I can get in on this trade. The ES or the NQ is moving so fast. I could have done this or that, or if I do this and it's going to move 30 points. Try your best to think about the trade objectively. Just look at the price action. Look for areas like this. Let the first 5, 10, 15 minutes go before you even consider entering a trade, because looking at the DOM, it is going up and down, up and down, up and down, and it's just chaos. So focus on your chart. Maybe minimize your entry system if you're using a DOM or something in Tradeovate or a NinjaTrader or whatever platform you're using. Maybe just look at the candles. Watch the candles form. Let them create some structure to then go in and create a trade plan or a trade idea. All right, moving on from that, I'm just going to go ahead and get these levels plotted in. I'm going to remove these lines. And I'm going to clean up most of this because it's pretty irrelevant after an FOMC day. I would like to see tomorrow's action and Friday's, even though we have witching going on where you have stocks, options, the futures contracts, multiple products rolling over on Friday. So I'm curious to see if we're going to get some regular price action or if we're just going to chop. I would imagine we get some move out of this range, but we'll just have to wait and see. So I'll just go ahead and do the typical draws. We've got our prior day low for the New York session on the NQ at 24.2. And we've got our high, which I'm going to leave this high up here because it is the current all-time high for the RTH session. So I'm going to make a new one for prior day high. And that was set at 24,550.75. Let me make this a different red color. All right, so we've got our overnight all-time high, we've got our RTH all-time high, we've got our prior day high from today, Wednesday, and our prior day low that is down here, and then we've got our overnight open. So let's actually put this on here. Overnight open was at 24,498.5. I'm going to take this, that was a fib short box out. And then we also have a 15, I thought this was a 15-minute gap. Or was this a 30-minute fair value gap that we plotted earlier? Well, either way, there's a fair value gap above. I wonder if that's 5. 5, 15, 30. So far, the 15 and 30 are proven out that is, yeah, this is, so a 5-minute fair value gap is still above us. Some poor structure. Just keeping that on the chart through the end of the session tomorrow. If it gets hit overnight, I'll just pull this box back and I won't carry that over. And I think I'm also going to add in here plus current week high RTH. We've got our current week high all overnight and then our RTH overnight, or sorry, our RTH current week high there. So I think this is pretty much it for now. I'm sure there's some fair value gaps in here on the 5-minute. We could probably plot out, such as here, even though half of that got retraced, so I would go there, and then potentially here as well. And I'm just going to bring these over, mark these a little bit darker gray, bring this over. Now I'm going to actually adjust these. I don't want them going into the market grid or the zone on the chart tomorrow, just to kind of make it a little bit cleaner. So I have that stopping right before the market opens. So a couple 5-minute fair value gaps below on the NQ, leaving us with these levels here as what I will go into tomorrow's action with. And yeah, that should be good enough. So our highs, overnight open, Sunday open, prior day low, and then prior all-time high, last week high. Then there was the contract change from U to Z, where everybody's trading now on the Zs. Those expire again on Friday. So now let's go ahead and switch over to the ES. And sorry if many of you are trading the ES. I know that normally I have been trading the ES, and I've recently switched the NQ. If you want to see more information on the ES, or you want me to talk about it more or put it on the stream more, let me know. I'll do my best to help however I can. So typical daily levels, like we just said on the NQ, we're going to do our prior day numbers. Actually, I was going to leave that one there, and we're just adjusting this to say the all-time high, RTH, and then we're going to go with a new prior day high at 66.86 half. Yep, 66.86 half. Call this prior day high. And then let's adjust the overnight open. Which I need to put the rollover lines on here because I cannot see. There we go. It was pretty close. Right there. The open is, I hate this number. 666 is 4.5. Okay, so we got a prior day high. Sorry, I've got a dog scratching himself profusely behind me, making a lot of noise. Let's just update it to that color. Okay, so we've got our all-time highs set above our prior day highs, our prior day low. Let's just adjust that. The low was 66.11s. And I think we're pretty much good there. I can also add in here plus current week high. And I just have OCD, so I'm changing this color because I don't like it. It's like a blood orange red. Okay. Anyways, we've got our level set here. Tomorrow, just keep in mind the data print that's happening at 6:30. That's Mountain Time. So 8:30 Eastern Time. You've got that event for unemployment claims. And we will go into tomorrow with the same idea, letting the 15-minute range set on the ES. On the NQ, I am going to be looking at both the 5-minute and then also, I'm just drawing up imaginary boxes, the 15. So generally, the 5 is going to be smaller than the 15-minute range. And we'll just see where we open at. We may, it looks like overnight, try to hit the high of the day. Maybe retrace and go into this poor structure. I'm going to be off the charts tonight, though, and not do any overnight trading. And yeah, we'll just go from there. I'll share these levels out and the chart out. If you have any questions, please let me know. I do want to call out one change that I am making in the Discord, and that is adding in a new section for anything other than trading. About remote jobs is what I'm setting up. So what I want to do, and I posted a job offer last night, but essentially many traders, especially new traders, might be folks out there that are working in whatever industry that pulls them away from a computer. And in my opinion, when you're at a computer, you can trade a lot more efficiently. However, if you're on mobile, on an iPad, you can still trade and make thousands, millions of dollars. I just prefer the desk, and so to help promote that remote style life and remote work where you could trade and work from home, or even if you're just needing to get some extra cash, I'm going to start looking for remote jobs and posting them in this bundle of channels here. Mostly just job postings, right? I'm going to throw in some resume pointers that I've ran into that have helped me along my career, and also some interview help. A lot of this came right out of my own career. Formatting messages like this, though, I use AI every day. This came straight from ChatGPT. From whatever I type into it, it helps me just make a post. But at the end of the day, the AI, in my opinion, is only going to be as good as what you give it for whatever task you're trying to accomplish. So for this purpose, we used to use Star. I worked for this company called Aon. They actually used to be Manchester United's sponsor a long time ago, and I think now Chrysler is. But if you know Cristiano Ronaldo, or any big soccer players in the Barclays League. Cristiano Ronaldo, I'm not even saying his name right. Aon was essentially their sponsor. And when I worked there, I learned, this was like back in 2012, a different way to interview. And one of the interview methods is called STAR, Situation, Task, Action, Result. There's other ways to describe that acronym, but I just essentially want to put out some pointers out there. If you are going into an interview, if you need help with your resume, if you're trying to find a job, there's so many resources out there that are better than what I'm going to put here. But the things that I do see, I'm going to post in here and take advantage of them. You can put your own postings in here too. So this is going to be open for everybody. The only thing that's not open to type or do anything is this channel, because I just want this to be an announcement for what the purpose of this whole category is. And I'm just simply trying to promote another way to make money. That's what this Discord is about. At the end of the day, we are here to make money. Now, the primary purpose is making money by trading the opening range breakout, or taking what you learn and customizing your own trading strategy. But the remote job category is really just to help put money in your pockets. Now, it's going to have to come from your own work and you putting in the time and the effort if you don't have a job. But I'm going to put out some postings here that may be something that you want to try to do and take advantage of to promote yourself in your trading journey. I think if you can get more money in your pockets, then you have more money to pay down whatever debts you might have, to alleviate some stress you might have, and to also fund those evals, pay for those activation fees, those subscriptions, whatever indicators you use to pay for and fund your own personal account. So that's my long spiel. I'm just going to throw some jobs out here. Hopefully helps you guys. I'll throw some resume tips out here that I've found. And I don't really know what other interview help I might put in here, maybe some other comments, but I'll try to update these as time progresses. Otherwise, please continue to take advantage of the free trade plan that I'll be putting out for the rest of this year. I put the 2026 paid categories down below because we're not there yet, but once we get there, this section might move up in order. And again, the free streams, jump in, ask questions. I will only be as active depending on how active the folks that come in. And I'll continue to stream on YouTube. I've missed the last couple days, so I apologize about that. But anyways, free trade plan. I'll drop that in here. And I'll add the levels as usual. But that's all I've got. Sorry, this video went incredibly long. But I hope you guys had a good day, stayed green, or stayed out of the crazy FOMC print. And that's all I got. Take care.